thank you for being part of this edition of the Trader's Diary.
It's absolutely a pleasure.
Thank you very much. I used to start this way. This is two traders interaction, conversation between two traders, and the essence is for to deepen the knowledge of how the market really works and what you do. But first off, run us through your journey. What market do you trade, and run us through your journey so far in this market?
Okay, so my journey started about 10 years ago. I started out with the currency markets, that's Forex as we all know it. At the start, the focus wasn't, the idea wasn't Forex. The idea was financial markets generally, stocks and stocks majorly. But then the stock market wasn't so accessible for me at the time, and I had no interest in Nigerian markets, to be honest. So currency markets were a lot more accessible for me. So way back 10 years ago, I was still in the university at the time. That's when I opened my first live account and traded my first live account. Of course, the learning process started a few years before that time, but I usually do not account for that because it wasn't a documented process. But I opened my first live account 10 years ago, and that was the start. And since that time till now, I usually say there has been no days off, year in, year out, putting in efforts, day in, day out, putting in effort to get better at the craft.
Wow. So, for a decade now, you've actively been in the FX market, actively been a trader in the FX market. And
yes.
well, the interesting part I want to ask you, Mr. Nasir, is let's look at it. What has been the pitfall so far that you've experienced in the market? I know this is like where most traders go through, and just give me.
That's a very interesting, broad question because I wouldn't even know where to start from. There have been so many pitfalls.
Just give us a major one or two that you could.
Okay, my first big risk in the market was risking my school fees, actually. So I wouldn't advise anybody listening to this to take such risks because we read about these things. They say to us that don't risk money you can't afford to lose. We never really understand that concept till we do it ourselves and get hurt. So I went to a private school, so my school fees was quite substantial at the time. So I risked my school fees basically, and I lost it in less than 2 weeks. So that almost cost me an entire year school session back in the university. So that was my first big challenge. Along the line as well, lots and lots of other major losses. The fortunate thing for me was the risks I took were mostly with family and friends. So somehow, you either get a write-off from these people, or you get some concession and a reasonable time to pay off. But one thing I've made sure of in my entire journey is I never owe anybody.
So there's been progression in your journey in the FX trading arena.
Yes.
So, okay, from being an individual trader and currently, what level have you taken it to at the moment, and how did you operate now?
Okay, well, of course, it all starts out as an independent individual trader.
Mm-hmm.
So everything I've done in my career so far is FX related. So after my university days, I got into various institutions. So I've seen the institutional side of trading, and I've seen the individual side. And currently, I'm on the institutional side. I've seen the brokerage side of trading as well.
Okay.
So, and I've seen the trading side of trading. So those are two aspects to it.
Okay.
So I started out with, or my first step into the broader forex market zone in Nigeria was when we had the first Lagos Forex Expo in Nigeria, and that was back in 2014, organized by Mr. Emeka Basil. That was a very interesting event. I co-organized that event with him. We had the second edition of that event in 2015 or 16. I'm not too sure, in Sheraton. So that was my first step into the broader industry in Nigeria. After that, I worked with INFX, which is also a multinational forex brokerage firm. I worked with them for a few months before I left. I started out my first fund at the time. So the fund ran for about a year, but things did not go as planned. One of the pitfalls, speaking of which, so I had to go look for another job because that didn't work. Then I got a job with Magnatis Finance. They had a forex brokerage arm as well at the time. So I joined Magnatis Finance and stayed there for a while. I left Magnatis in 2015. At the time, I got another engagement with a research firm, A to Z Markets. So it's a European-based firm. One of the guys I worked with in INFX, who is based in Europe, actually owns that firm. So he invited me over to run research and analytics on that website. So it's more like a media website and research, basically, and analytics. So I was highly involved in that project for close to 2 years. Before I quit to eventually start my own gig, which is what we now have as DZC Capital.
So basically, forex management, portfolio management.
Yes. So what we do is we're running as a hedge fund.
Okay.
Yeah, and we are a global macro hedge fund. Our focus is not just the forex market. So we're trading stocks, we're trading commodities, we're trading forex as well.
Okay.
Different aspects.
Let's come down to opening your career as a trader. Tell me, what has been your biggest day in terms of gains? Memorable day in terms of
Sizable gains.
Sizable gains.
Okay, well, as you progress as a trader, there are some of your happiest days may not be the days you had the biggest profits. So, and for me, that's the case. My biggest days have not come from the biggest profitable days.
So happiest days.
My happiest days.
Yes,
my happiest days have not come from my most profitable days, but rather from unique events surrounding certain situations. So I remember one that stands out for me is when I was going to get my first car. I had a trade running. Of course, it was a very large trade because I was eager to go close the deal on my car. I had a very large trade running on my account at the time. So it was running in negative for a very long time. So that day I had to step out. I had to go to the car dealer actually because I had already called him earlier in the day that I was coming over to check the car and all of that. I had made a deposit. I was supposed to make a balance payment, pick up the car. So I went over to have a look at the car and all of that. My trade was running negative at the time. And there's something I do is I make it a point. I do not have I don't have any trading platforms on my mobile phone.
Okay.
Because I try to disconnect. When I'm away from my laptop, then I'm away from the markets. So when I sit down at my laptop, I want to focus all my energies into analysis. And
So you see, it's more advisable to trade by, because there's this thing in vogue now, trading on mobile trading. You're going to go back to that at MSTA.
Yeah.
There's this thing in vogue now, trading, mobile trading, and trading laptop or trading desk. Which is professional as a trader, which is more advisable?
I never advise anybody to trade on mobile. I never advise anybody to trade on mobile. Even as a professional, I don't do it because it only gives you an opportunity to be reckless. That's where I see it. Someone else might have a different opinion.
As a trader, that's always been it. So having to look at it from remember every time, having to have a view of the market, every moment gives you the opportunity to be reckless.
Exactly.
Rightly said. Okay, so back to your RPS.
Yes. So all of by the time I left the house to go to the dealer's place, my trade was running in a large negative, and I was just there wondering how I was going to meet up, but I just went, to fulfill all righteousness and got back to the house. Lo and behold, my trade had reversed at the time and hit my take profits, when I got back home. So from a negative position at the time I was leaving the house, I came back to meet a positive position. So that trade was just about 1,000 plus in profit, but it still stands out as one of those days I never forget.
That's really interesting. I think most traders will really relate with this kind of story. Because you would imagine at the point you have positions on that are running negative, and all of a sudden you come back and you make them profit and then. But let's look at it. What gives you the edge in the market?
For me as an individual and for us as an institution, our edge is derived mostly from our structured pattern of trading. So when I mean structure, there's a lot of other sub-components. First off, we have a standard trading model, which has been developed over the course of my experience. Now, not just me, but our combined team have at least nothing less than 20 years plus.
So this standard model has been tested, validated, and seen to be
tested and trusted. So that's the first thing. We have a trading model which we apply to markets. Before we take any trades, every trade has to suit that trading model. Now, it's not just enough for the trade to suit a trading model. It also has to go through compliance checks and risk management checks. So we have a dedicated team dedicated strictly to risk management as well. So even after we have a proper trade, we don't just size up anyhow. We have our risk limits as well. So we have a risk management team that constantly checks that we're sticking to those limits. Because as I usually say, there will definitely be losing days, but we try to make sure there are no bad days. Because a loss is a natural occurrence in the market, but a bad day is born out of you doing something you shouldn't do, whether taking excessive risk or taking a trade you should never have taken in the first place. So that structure we have in place is what gives us our unique edge.
Wow. In dealing with the market, interacting as a trader, and having those days that would call the bad day in court, is it because you didn't follow the model, or because your risk allocation was outside what it was supposed to be? What causes this? Because you said this, this isn't part of the game. Yes, we have unexpected events that would happen, and eventually could lead to closing a trade at a negative. But let's look at it majorly over time from your experience as a trader. What causes this bad day, bad trades?
Yeah, so very simply, as I previously mentioned, losses are natural. So even when you follow your model to the T, there are times you will still lose trades. I mean, our model gives us a 70 to 80% win potential. So we still have 30 to 20% loss potential. Now the idea is to make sure that the loss never exceeds a win. So a bad day basically is a day when we size up too much. Maybe we're feeling too positive on a certain trade and then overconfident, and then we take more risk than we naturally should take, and it results in a loss. That's a bad day. Another example of a bad day, which is less likely for us, is a day we take a trade we should never have taken.
What do you mean by that?
A trade we should never have taken is a trade that does not suit our model, basically. So markets are always moving, right? We could look at our charts now and we're seeing ups, downs, ups, downs, ups, downs. So there's always opportunity to take a trade in the market. But for us, we are not interested in all of that movement. All of that movement is noise to us as far as we're concerned. There are only a few times where the market would align in such a way that it now suits our standard model. So our model is more like a checklist. Is this present? If yes, then do this. Is this present? If yes, then do this. So once we run those checks, if they do not fully comply with our model, then we have no business taking that trade.
So we know that there are some traders that are scalpers, position traders, swing traders. From your experience and as a trader and from the model you're trying to, I understand you may not want to go into ticketing because that's your business. What type of trader do you advise one to be?
Okay, well, I have tried it all. I want to believe I've tried it all. I started out as a scalper because naturally that's what appeals to the mind. The concept of making quick money very quickly, very fast, in a very short space of time, you close out. I started as a scalper. And experience taught me that scalping may not be the best way to go, at least for me. So right now we are more long term in our approach. So we do both position trading and swing trading. And I would advise that that's always the best for whoever's coming into the market. Another thing I must say is that there are no right or wrong answers in the market. So just because that works for me doesn't mean it's the right answer. But from experience and from what I have seen with other professionals I have been able to relate with, most people tend to gear towards position and swing trading.
Before we started this, we had a discussion on the continuous learning process. You discovered based on interaction that some people would, in just 3 weeks, after having gone through, probably read something online, downloaded something on YouTube, done or two demo trading, and the market has been so generous that when you are new to the market, your first 2 trades becomes positive. So you feel you are a professional, so the market makes you, attracts you to it. And so my question here is the learning process. Is it one time thing? Is it continuous thing? Is it?
As a trader, I mean, learning never ends. It never ends. I've been 10 years plus in this market, and I'm currently now running 3 different courses still. So when you start, the progression is usually faster because you have a lot more to learn. But by the time you go higher in your experience, it might be subtle lessons that you start to add that makes you better. But the learning never ends. Now, for those guys out there who would take a course or 2 or read a book, maybe 1 weekend seminar, 2 YouTube videos, and you brand yourself a professional trader, well, I wish you all the best because you might have to learn the hard
way in the market.
You have to learn. So it's very, very key that you take your time in this market. You have to take your time. It's one of those skills that naturally takes time to master. So it just naturally takes time to master. So I would always advise that people start out small, basically. Never risk money you can't afford to lose. That cannot be overemphasized. Start small, learn the ropes, build a portfolio, over time, you know, monitor your progression, at least see that you have consistency over at least 6 months before you start to feel that you can do this, you know, real time or big time. That's one, right?
Yeah, that's key. We talked about having a structured and an unstructured environment, and this takes me to the aspect of emotion. Now, can we completely take emotion out of trading? And what do you mean when we talk about emotion in trading?
Emotion is always the elephant in the room, you know, so to speak, when we're talking about trading, because as human beings, our emotions are what make us human. As a being, as an entity, that's part of what makes us different from other creations of God. You know, so we can never take it out from our being. The best we can do is to try and keep it under control. Now, if it were possible to totally get rid of emotion, then there will be no need to have a structure around trading. You know, because you can simply, okay, when you sit down at your charts, when you want to make your analysis, you lock up your emotions somewhere, throw away the key, and do what you need to do, then you do the right thing, you know. But that's not possible. So the only way to properly keep yourself in check is to have a structure around the process, and which is what we've done. We've tried to remove the individual from the picture. Even though I head my trading team, I do not solely make all the decisions. Even when we see a good trade that suits our model, you know, there are some trades that are just bread and butter. You see them, they're perfect according to the model, everybody agrees we take the trade. There are some other trades that are open to discretion, like, okay, you look at something, maybe someone is saying, oh, this trend is not fully bearish, or someone is saying, oh, this trend is more neutral, you know, stuff like that. And subtle things like that could determine whether a trade is good or a trade is bad. So when we do this thing as a group, it helps. That's one way to take out emotion from the picture. Another level is having a risk manager who will always check and balance your ideas so that you don't get overconfident and risk too much. I mean, we had a situation just last week Friday. All the trades we were taking in the course of the week were great, so we were on a high, basically. And then on Thursday, we had a good trade running. It was the US dollar versus the Canadian dollar. Okay. We were long that pair. So we went long on Thursday. One was a swing position, one was a longer term position. So our swing position on some of the accounts hit take profits. Now on some other accounts, we put our take profit a little higher because we felt that the market was going to rally strongly. You know. So on Friday at 1:30 p.m. we had data for the US and Canada, and we were hoping that we were going to have good news for the dollar, bad news for the Canadian, good news for the US dollar, bad news for the Canadian dollar. But apparently when the news came out, it came out opposite. It was very good news for the Canadian dollar, very bad news for the US dollar. So the market slumped strongly against our position. So that trade hit a stop loss. But of course, that wasn't a bad day because we have done the right thing.
So I want to ask this question. It could be funny. Have you ever been greedy in the market, and have you ever been fearful in the market?
Absolutely. It's well, in words of Warren Buffett, by himself, he says you should be greedy when others are fearful, fearful when others are greedy. I've been both at the wrongest times, you know. So it's not until recently you start to have a grip on your emotions to be able to do what's right. So you're not a complete trader if you've never been greedy, you know. If I'm speaking now from a point of view where we did the right thing, it's not because we've not done the wrong thing. You know, we're only able to do the right thing now because we've seen the other side. We've done all the wrong things, and you never get the right results by doing the wrong thing. So absolutely, we've been greedy so many times, and it has hurt us so many times. But we just constantly try to do the right thing. Another thing I must mention as regards emotion is, even when you have a structure in place that helps you check and balance, you still have to internalize the importance of doing the right thing, keeping your emotions in check, not eliminating them per se, but at least keeping them in check. So what I do, one of the very, very important tools that, which I would even attribute to my success, is meditation. A lot of people ignore that very important aspect. I'm yet to meet not meet, but at least read about so many professional traders. Many of these guys, they are almost like philosophers because of the approach to the market, the way they take care of their minds. You know, they take care of their minds almost monk-like, with monk-like discipline. You know, because the mind is where it all emanates from. So you have to take care of your mind. If you wake up one morning and you're feeling angry, and you come into the market, you will act angry.
Yeah.
So for me, I wake up and I do my best. I do not do it every day, but I do my best to meditate every morning, at least for 20 minutes.
Okay. Do you relate to other traders who are trading outside your
My
team?
circle. Yes, I relate with a few guys I respect. One of them is Adeshina, who is a friend, a brother. So we've come a long way together. He's a trader as well. So he's one of the few guys I relate with. I have other guys that I relate with, but my circle is really quite small.
I can understand. What would you say about the aspect of mentorship?
It's absolutely a good idea. Absolutely a good idea. Because
Do you have a mentor?
That's an interesting question. Almost everything I learned was self-taught.
Wow.
But if I had to do it again, I would get a mentor. Because that would have cut my journey by maybe 70%. So maybe 70% of the mistakes I made, I would have avoided by having a mentor who would have just held my hand. But it is very important to have the right kind of mentor. That's it. Because a lot of the guys we have in the market, I'm sorry, all talk, no action. Especially from those guys on the brokerage side who are more selling the product of the broker. You know, the idea for them is to get as many people trading as possible, you know, for their own benefit. So get a mentor. I'm not saying that everybody who's teaching for brokers are not good. That's not what I'm saying. A lot of those guys I know and I respect and I learn from. You know, but bottom line is make sure you get a proper mentor.
Okay, so we're taking this interview to close, but my question is what are you trading right now?
You mean what markets or what positions do I have?
What pair are you trading since you're in FX?
Yes.
What position, or why, and what are you looking at?
Okay, so I'll give you one of my positions that we've been holding since for about 3 days now.
Okay.
That's GBP USD. So we've been short that pair for a few days now. We took profits initially. We re-entered yesterday because I think that pair has quite a potential to the downside.
So what time frame did you use to use for it?
From the monthly to 4 hour. That's our range.
Okay, please continue, because I think I have an interesting view to GBP USD because I actually looked at it myself yesterday. So it's an interesting pair to talk about. Okay.
Yes. So basically, that pair looks like it still has in the medium term. If you look at the weekly charts, I mean, last week was a full bearish candle. You know, that candle formed within the context of an indifference. The market was trying to decide whether it's bullish or bearish. So as of last week, I wasn't fully clear on where the market was going. But with the price action we had Monday, Tuesday this week, it has shown quite clearly that it seems to have potential to the downside. So I'm still looking from the last time I checked, I think it still has a room of about 100 to 50 pips to the downside before the potential for another bounce up. So I'm short there and I'm hoping to hold that for a few more days.
I think I actually align with you as a guest star because I notice it's actually approaching the demand trend line, like the upward slope trend line on a daily time frame. So I have a view on it. So I'm actually short on British pounds JPY. So
interesting. That's a very correlated pair. Yes. That's an interesting one, by the way, because the yen for me, I've been looking to go long the yen. Last week we were long the yen on various pairs. GBP, JPY we were short.
The yen was
Euro JPY we were short. So one of the things we do is we do not directly apply fundamentals, but we have a very strong understanding of what's going on.
That's my next question. Are you strictly a technical person, a fundamental person, or a blend of both? And which do you use most?
It's absolutely a blend of both. It's a blend of both. We use our technicals to make our decisions. Just as I mentioned, I want to be long the yen, I just haven't gotten an opportunity. As much as I know the yen is supposed to keep strengthening because of the issues
trade
with
wars,
China, the US trade wars and all of that. Times like this, yen is usually a good place to go because it's a safe haven, currency. So the reason I'm not currently long the yen is because we have not seen a technical reason to be long. Most of the pairs are overextended already, so we need at least a retracement before we get into any positions. So fundamentally, we have a positive bias for the yen, but we are not long the yen because we do not have an opportunity to be on.
So you have an understanding of the fundamental aspect, but you base your trading decision on the technical
aspect.
Okay, I don't want to talk about any broker, specific broker, but this is my next question. Do you strictly use MT4 or there are other trading stations you use that helps you in understanding the market data, having a clear view of the market data, or is strict MT4 trader? Because most brokers comes up with MT4. But there are some that comes up with special platforms, or there are some data providers that gives you more clear view of the market. Tell me.
So for us, unfortunately for us, the terrain we are does not allow us to explore too many options. Nigeria is on so many financial blacklists. So a lot of these third-party platforms do not allow the use of Nigerians. I mean, we're trying to use eSignal. We're not able to. TradeStation, we're not able to. I have a negative bias towards MT4. We currently use it because we do not have a choice. That's the truth. So if I had my way, I wouldn't use MT4 at all. So we currently work with MT4 for our currency trading because we have a good broker whom we can trust.
Okay.
So we currently use scope markets for all our trading activities, and then for the stock side we use Ninja Trader. So that's also a third-party platform, but at least we're able to work with them properly. So if I had my way, to answer your question, if I had my way, I would use MT4. I don't have a choice.
So, Mr. Nasir Mohammed, I appreciate your time with us, and thank you for opening your diary.
Well, it's a pleasure. I hope I've been helpful.
You'll be very helpful, and I hope the next time we will knock on your doors, it will be open to us, and your diary will be open to us. So I know. So I appreciate the time, and this is a trader interaction. So, and the essence, like I said earlier on, is to deepen the market knowledge and to make the market really understand how the currency market really works. And as a trader, as an active trader, we want them to view, not to just see what they read online, but have understanding from an active trader. So it's a nice time with you.
Thank you very much.
Thanks for your time. I appreciate it. So see you next time. I appreciate you.
Yes, my pleasure.
Thank you.